and Jamie.
Hi,
How's your
Scott.
business?
Hi. Oh, not bad, not bad. Hey, Jamie, how are you?
Doing good, Andy. Doing good. Just another day
Uh,
in the grind today. It
oh,
looks, feels like that.
yeah.
Market wise.
Yes. It was definitely a kind of a grinding day, which can be uh, nothing, abnormal considering we have jobs numbers, in the morning. Probably a lot of people just waiting to see what happens with those numbers and if there's any market reaction to it. But hi, everybody. Welcome to the trading studio. My name's Andy, and that's Jamie and Scott, and let's dive in. All right, before we do, let's go over the disclaimer here. We are a publisher here at Trade Ideas. We publish content, and so nothing that you see or hear from Jamie or I today should be construed as investment advice. If that's what you're looking for, you might want to seek out a registered advisor or a stockbroker. All right, the agenda for today. This is going to be, I think, a very educational webinar today, and I think it could probably help a lot of guys and gals that may be struggling um, with this market. And I know how it can be. Even old grizzled out vets like me and Jamie can find it, especially after being in a bull market for so long. Uh, you got to learn to adapt, and I'm going to show you a method just by playing relative strength and how you can really limit your downside and possibly make some good money to the long side if you are a long only type a trader. And then I'm going to just really briefly look at the webinar from yesterday, just kind of a quick review on what we talked about. I know some people missed that. We had a great turnout, by the way. It's a great partnership that we put together. So if anybody missed it, I just want to go back and just kind of show you the deal for those of you who might want to get trade ideas for free. All right, before we dive into the content, let's talk about our 5-star support education and training here at Trade Ideas. It's a very powerful software. We realize that. And we realize a lot of people come in and they actually get frustrated after a first several weeks or a month, and they give up. And if you want to take trading seriously, you really don't need to be doing that. Any job that you go into, you're going to have to learn new methods, new software, and you're going to spend months, really before you understand that business. So trading is the same way. You got to take it seriously. You want a powerful tool like Trade Ideas if you are going to take trading seriously. So don't get discouraged, coming in thinking it's just a golden goose and you're looking for just a software that's going to just call out trades for you, because they're not out there. I'm telling you, you have to learn to trade. There's no holy grail. So with that being said, we want to do everything we can to help you through this process, and we have tons of information for you, tons of content on YouTube, videos. We have webinars every day. You can see them there on the left side. Of course, we have two. We don't do them every week like we used to. It was taxing on us, but we split them up so you can watch 2 or 3, a week. And then, of course, our support webinar. This is our daily support. We offer 2 times now because Chris Varley will take over the helm about, I believe, 4 Eastern, or is it maybe 3:30 Eastern? I think that's when it is. He takes over Barry's room and he opens that up for any questions. But we also have the 12 every day, the 12 p.m. Eastern time slot. We take over Barry's live stream, and you can come in there and get as much help as you want. So take advantage of that, people. It's really, if you want to really learn the software, use our resources, and because you really want to take advantage of that. All right, let me back out of this, and I'll save that for Scott on the way out. And let's pull up the.
Just Andy, kind of real quick here.
No problem.
Does Centerpoint allow Canadians to open accounts?
They're working on that. They're close from what I hear. Talking to Mike yesterday, otherwise they have traders Europe, worldwide. I don't know. I think it's just Canada's a little more difficult, I think, to come in as an outsider and operate as a broker. But
Right. So David was asking the question there, but assuming they get approval, then that would be true, David. Yeah, no
mm-hmm,
PDT rule.
mm-hmm, that's right. Yeah, as long as you maintain the minimum balance, that's for sure. All right, so what have we here in the spies? Okay, once again, we're kind of at some crossroads. You can see we got up here to this 20 period moving average, and we got close, but not very close, a little bit closer yesterday, and now you got the descending 20 period moving average where we couldn't really even touch today. So that's our look basically heading into the jobs number. I think if, I'm still bearish. I do not think the bottom's in. That doesn't mean we can't still have another, 3 or 4 days of move to the upside. I mean, this is your key level. Obviously, you got a 3-day high there, and if we get through that, we're going to be getting through that 20 period moving average. So I actually tried it. I faded the market up here, and I covered half at the close just because I'm like, yeah, I don't know what these job numbers. You're probably not going to do anything, but it's always in the back of my mind, when you put on a short, and it's a triple leverage ETF at that, So I did take off half, but not. I could always add it back in tomorrow if we crater, but that's kind of what we're looking at. What could possibly happen? Well, if we do get above, this level, I think we may have some clear, some pretty clear sailing all the way up to this one. I mean, the 50 period is way above there. We do have a ledge here, which is a critical pivot point around the 390 and the spies. Draw a little line there to show you, because once stocks break through certain levels, they have a tendency to move to the next level. That's really our next level of resistance. So I would not be surprised if we do, break through and close above this 20 tomorrow, that we could make it back. It may take a couple of days, but we can make it back up to this level. And then, of course, the next level of resistance would be the 50 period moving average. But all that being said, just because we're through the 10 period moving average, okay, and the 10 period moving average is trying to flatten out, that does not mean, the tape has changed. We're still in a very bearish market right now. Even back over here where people were getting really excited, that was still, that's kind of our downtrend. That's exactly kind of where we went to, along with our 200 period moving average. So to get us out of this downtrend, we would probably have to break through this 200 period moving average, and once again, that would probably put us right about, even with this trend line. So that's going to be a key level before I think you could really start getting, excited about the bull market returning. Below this, guys, I mean, we already broke through. This was a key level we broke through, and what happened is we were just too oversold. A lot of bearish sentiment was out there. Anytime you get the put call ratio really high, and the sentiment, needle moving way over to the bearish side, that's not uncommon, to see a little bounce off lows like that. And they're usually brutal, because you have people, finally covering the shorts, and you got new longs coming into the party. So that's why they say a bear market can ruin both bears and bulls. All right, let's take a look at the Qs real quick. Kind of the same picture here. There's your 20 period moving average. I'm not going to rehash everything because it's pretty much the same scenario there in the Qs. IWM displayed more strength, which is not uncommon. I told you guys a while back, a lot of times when people are looking for market bottoms, they'll rush into the oversold. They find more value, it seems like, in small caps, and thus you get a kind of a bigger move, even though it's still. You can see this actually poked through the 20 period moving average a couple of times, but the closes were, not above it enough to call that a, strength. So, but all in all, Jamie, you still got to hand it to the Bears. I mean, they're in control, even though we've had a nice bounce off lows. But yeah, it's not uncommon when you've had a move like this, to have kind of it's kind of like stretching the rubber band, guys. You keep stretching it, and then when you let it go, it's going to have a nice little pop back. Now, where it goes from here, if we roll over, and take out, this 10-period moving average, I doubt seriously these lows are going to hold again. And then we could really see some ugliness in the market. And since I probably won't be talking for another couple of weeks as far as a webinar goes, let's take a look at where, this could be a pretty decent fall. I mean, you had a little edge back here. This is kind of where we bounced at. And I think if I go to the weekly, I think I showed this the other day, you're going to see the 200-day moving average as well. And that's exactly close slightly, let's just call it right at it. And then that's where we had our bounce. So if we do go back to lows and break through our last moving average on the weekly, yeah, I would not be surprised to see, a quick move, another, quick move down to the 325 level possible. So keep an eye on that. Okay, don't get stubborn if you're long and we roll over, and take out this low of last week. So keep that in the back of your mind.
Yep, the monthly confirms, just a little bit easier to see that next level that we could
That's
go
right.
down to. Yep.
That's right. People would argue right here would probably be for sure in my mind 340, 339, 340 level. Just draw it in case somebody can't see that would probably act as a little bit of a support, but nothing I would rush in and load up, the farm on them. But anyway. All right, Jamie. Well, there was a couple of actually, a couple of good trades there in the Holly today. Would you like to take over and talk a little bit about those trades?
Well, we were just, they were
You don't have to.
winners.
Yeah. I
We
could
can
just
take
go
a
over them real
look
quick.
at them. There's no, but what I was
Here,
getting at
I
is,
won't give it. Well, we'll just take a look at them together.
sure, because there's
Yeah.
no spread between conservative or moderate.
Mm-mm.
There's no
Okay.
trade arounds, and there's not really any good add-ons. But there are a
Okay.
couple of winners. Yeah.
Yeah, I thought this was a good contrarian play there. Stock that had a bounce for 3 days, but in a downtrend, and there was your signal, your sell signal at the 198. Now this is a cheap stock, so you'd have to probably buy a few thousand shares. Well, I don't know. You got some there at the close there. You got a
Yeah,
little bit of
a little
pop-up.
bit of a moderate spread in this one.
Mm-hmm.
Yeah.
Mm-hmm. And it did hit the target eventually, huh?
Yeah.
Okay. And BSIG was a double call, huh?
It
Wow.
was.
Yeah, I'm seeing it twice on mine. Breakout long and then a pullback long. So I guess there's the breakout early in the morning, and then looks like wait, breakout was after. No, that's right. 8:40, 10 minutes after the bell, we had a breakout long, and then Jamie, we about
The pullback.
40 minutes later we had to pull back long. So double
Yeah. A pretty trade
confirmation there. Yeah.
nonetheless. Yeah.
hmm Yeah, nice little trade for about 50 cents. And then let's not just talk about the good ones. Let's see what went wrong with Surge here. Surge was kind of just the opposite of what Holly did in the CSCW, where she kind of faded the move. This one, Holly was thinking long, and that did not work. That was a top tick right there. And look what you have here, guys. This is why I always kind of look when I do look at Holly trades. I apply my own experience, my logic, my reasoning to it. And if you look right here, look at this level of support. Resistance, and that's right where that ran into. Now, had it got through, that could have been a nice little pop, but nonetheless. And then Surge, kind of the same pick there in Surge. The key is, if you look at the P&L, is to get out when you're wrong on on these and hold those winners. And that's always the key when it comes to successful trading. Anything you want to add on, Jamie? As far as it sounded like you didn't have anything to add to those as far as
Well, my eyes were
trade
playing
arounds.
tricks on me because I didn't see in that short there was a significant 4-to-1, between conservative and moderate.
Oh yeah,
Um, but yeah,
that's true.
not a bad performance considering.
No, considering the market we have. Let me get this cough drop out of my mouth. All right, next topic, guys. This is going to be, I think a lot of people should kind of listen hard today and adhere to some of the things I'm telling you, because I know how difficult it is. And given the right market, guys, that I don't mind if the setup is right, doing a little bottom fishing, or looking or catching things on my revenue growth fishing that are hitting a 10-day high. So those I don't consider bottom fishing, because what they're usually doing is basing for a while and breaking out of a range. But I don't do a lot of that. I haven't hardly done any of that lately for several months, and the reason is because the environment we're in. When the market gets like this and it's real bearish, it's boy, when you're wrong, you'll have your days. Just look at ARC. Let's take a look at ARC. You're going to have your days where ARC has a nice little pop. Gap up on this day, popped, closed on highs. That was a nice performing day for beating up stocks. But look what happened the next day. You're gapping down. So they can be okay for maybe some quick day trades. Obviously, when they get going and you have shorts covering, they can be some really good moves. But for me, a swing trader, looking to hold things for a few days, which really been like a day lately in this market. But I'm looking for stronger stocks, and nothing can be stronger than playing. Michael Noss preaches on this relative strength. And relative strength is, and I'm going to share this with you guys, and I've shared it in the past, but I made a little change. And so I'll share it again. It's not a big change, but what this is looking for are stocks that are above all their major moving averages. Okay, let's go back, take a look at, and these are on a daily time frame. Go back and take a look at the SPYs, and this also can be said about the Qs and the small caps as well, the IWM. We're above the 10, but other than that, we're below 3 major moving averages in a downtrend. Okay, follow the trend. But what's not following the trend are stocks that are going to be above all their major moving averages. And somebody maybe new here may be asking, how do you know they're all above their moving averages? Well, I used our incredible number of filters just to create a scan that will only show me stocks that are above key moving averages. And it's real easy to do. Change from 10-day SMA 0.01. All you got to do in the min column is just put 0.01 on all your key moving averages. Now any stock that comes through, or that populates on your top list, is going to be above all its moving averages. All right, so very simple scan. Now let's take a look at today. Okay, remember what the market did. Okay, the SPYs were down 1.2%. Qs were down 1 point, about the same. And so you had weakness in the market, but look at all these stocks that are above their key moving averages, and look at this whole list, guys. It's full of a lot of green, and so a little bit of red, obviously, there at the end. I mean, some of them are not going to work, but obviously, if they're above their key moving average, you're going to have a lot of green, But it can be that simple at times. Okay, so if you are struggling, you're finding yourself, trying to find these darling stocks that were trading at 300, last year, and now you see them down at 29, 30 bucks, and you're thinking, gosh, man, I want to catch this down there, and you keep failing, because trust me, I would love to catch a lot of these and put it in my back pocket and forget about it. But the problem is we could go a lot lower. And I saw this in the dot-com bubble, and Jamie did too. So things can get a lot uglier before they get better, and sometimes it's just not fun sitting and waiting and losing. So, but here we go, just going through some of these guys. You're going to see there some incredible, that was a beauty right there. I wish I don't know why I didn't see that one. Stocks that are, and these are ones, guys, that you can find on your list, like right here on this day right here, where it probably entered the list for the first time. And well, nice little 3-day move from 8.20 to almost $21. And you're going to see that one kind of just now getting started, got above the 50-period moving average. Look at that move from right there. Once it popped above, it's going. Now, obviously, not all of them are going to do that. I thought pins was a really good break above right here on this day, and then it spent 2 days above them all, and now it's popping up. So anyway, these are stocks that, look at this VIST, it's VIST, what a move that had. Once it popped above right here, it would have came on your list. Okay, so even if you're doing your nightly homework, the first day you would have seen this is right here at $10. But look, since it's, almost a 20% move to $12 there. And you may be asking, okay, Andy, this is great. How would I play these? I don't want to be in a bunch of these and the market rolls over and these things get killed. Yes, it is anything's going to be dangerous going along in this market because we're in a bear market. Okay, but does it mean you can't have some really good runs in a bear market? Just look at the last 2 days, or 2 days before last. We've had some nice little pop, and you're seeing a lot of these on. Look at this HLIT, right here on this day. Bam, it was on my swing trade watcher, and I don't know how I missed it. That's why I got to put alerts when they're on there. But look at that move it's had, all the way. If you bought it at 12, you're looking once again almost close to a 20% move in a few days. Okay, so the way I like to play these things, guys, I don't like to chase. Okay, in other words, let me find something. Let's go back to HLIT. I don't want to be, even though you've had a nice little move, if you bought it breaking that go Paul's go day right there, you probably made 70, 80 cents. I want to be the one that are catching these things as close as I can into above that top moving average. Okay. And so what I'm going to do, I'm going to show you ways to kind of scan for these things before they take off. Because I can tell you right now, in a bear market, if you're chasing green candles, okay, more than likely you're going to get hurt. We've seen some cases looking at these where it would have worked, but for the most part, you don't want to be chasing, a couple of big green candles. Like I don't want to be buying MRO up here, even though it looks like it's breaking out to a 3-month high. Yeah, there's a great chance if energy keeps going, this thing's going to keep going too. But I want to be the one, that's buying it, maybe on this gap right here, and getting that $3 move. Now I'm the one who's taken off half and with a quick trigger on my second half. So, all right. So yeah, make sure, Jamie, if I need to answer any questions, just hit me up. I know there's some coming in.
Yeah, good so far.
Okay. All right, great. All right. So how do you find stocks that are above all their key moving averages and that are not, too far away? In other words, they haven't had 2 big days. I don't want to be chasing those days. Well, what you can do is I have columns like change from the 10-period SMA. Okay, we could click on that, and what we want to do is double click. Remember, we know it has to be above the 10 SMA. It has to be above all key moving averages. So if we just do this and do a reverse sort, we're going to find the ones that are closest to. Now you're going to get some of these stupid gap up stocks that are probably mergers or buyouts. So we got to go through them, make sure we don't hit them. So here's a good example. This is one. It's pretty sloppy. I don't know if I'd trade something like this. It's like maybe a biotech, and yeah, when I see candles like this back and forth, but this is kind of what I'm looking for. You got all these converging moving averages here, and you got the stock just barely closing, barely above it. That's kind of the thing. I want to take, not this one in particular, but that's kind of the setup I'd like to take because I know I got all this support with all these moving averages, below me. Okay. So my out, if I buy something like this, is going to be these key moving averages. So really getting a very, very cheap look in some of these trades. So in other words, my upside, maybe $2 or $3. And trust me, my upside in this market is far different than my upside in the bull market. That's a key thing you have to adjust if you're a swing trader. When you used to hold for like 5 to 10 days, right now you may only be holding for 2 or 3 days. Okay, and in some cases, depending on what the market gives you, it may only be a day. So you always trade the market backdrop. Okay, in other words, know what the market's doing. Okay, because you got to play it first. That doesn't mean if you have a really good position and the market rolls over, you just want to punch out real quick. No, but what you want to do is find that area on the chart. Let's find an example like HLIP was a great, let's just pull it up. It's a great example. Okay, HLIP was, from this level right here is just having an incredible move. Now, if the market rolls over and I'm in this thing right here, I'm just not going to punch out real quick. But what I'm going to do is I'm going to shorten up my stop. So in other words, if the trend is bullish, maybe my stop would be down here. I trust me, I would have already sold in half, and maybe my second half would be below this low right here. Okay, but then when the market starts rolling over, I'm going to be raising that up real quick. Okay, because now the market is resuming its bearish trend, and I know it's probably more than likely going to affect my stock that I'm in. So maybe I would raise it up to this level right here around 13. So hope that makes sense. But let's go back to finding these setups that you're not too far away from the 10-period moving average. And really, I'm looking at this, and I can just tell by the thing, and it probably has a lot to do with the move we've had over this week. So some of these are not going to be close. But what we could do as well, you don't just have to focus on the 10 moving average. We got two other ones over here as well. So we could double click on the 20-period moving average and go through, and here's a good one right here in this flex. I mean, it's not that far away from the 50 and the 20. You can see the 10s down here. It had a nice big gap up, and so but now it's holding on to this 10. I'm sorry, this 20 and the 50. So this would be something I would look for. Now, what I would do in a situation like this is I may come in here and just say, well, it's bounced twice right off of these levels. I'm going to put an alert down here right at these moving averages and see if I can get the stock to come back tomorrow. Not much, just basically about 30 cents. And not only that, I'll have my 5-day here on the 15. So basically, I'm looking for me a possible entry. Now, I can also come over here and bracket it and say if it gets above this level, I want to be in there too, because it's still relatively close to its, two moving averages. So I hope you see what I'm doing here. What I'm doing is I'm trying to find these trades that can give me some bang for my buck to the upside, but at the same time, it's going to be a minimum, because if it breaks down below these moving average, there's a good chance it's going to fill this gap right here. So I would be out quick. So you really got to shorten things up, in this kind of market, and you really got to take your profit sooner. At least, I like I said, I typically, well, I'll tell you a trade I made today. I noticed relative strength in Facebook. No, Meta, I should say, today. And not Meta. Let me get a drink of water real quick, guys. And this would be a typical trade for me. Okay, I was watching, I had Meta up. I like the way it was kind of going sideways. Okay, it's definitely in a range here. Now it was above its 10-period moving average, but still I knew this would probably either be a short trade, at least for 75% of my position, and that's exactly what it was. So what I do a lot of times, if I will kind of watch these stocks, and I noticed the market was down, but Meta actually came back and went positive on the day. Okay, and when it got above this 10-period moving average, okay, I bought some right there. Wait, I'm pretty sure my average cost was 38.60. So I think I bought this sooner. I bought it above this 5-day. That's what it was. I bought it above this 5-day here around 38.20. Then I added, as it got close to highs, I added some more around 39, because that was the high right there for today. And then it popped. Well, as soon as it popped, guys, I took off half of this move, because a lot of times what I'll do is I'll get a pretty good size, because I know in this market I'm looking to take half off quickly. It's I almost call it sway trading. It's not even swing scalping. It's like I'm just swaying with the market and what it gives me. Well, so what happened is I took half off. Well, as soon as it did this bar reversal right here, I knew I was losing my momentum. So I took another 50% off. I'm sorry, 25% off. So now I just have 25% of my position. If the market wants to go and this thing wants to finally bounce out of this range, and catch up with some of these other tech stocks that have had a bounce, I'm all for keeping that. It was still a pretty decent size because, like I said, I went in with pretty big size because I was expecting some sort of move, especially when it broke through yesterday's high, and I got it and I scalped it, but I hung on to 25% of that position, and what I did, I put a stop at this low right here if it broke that 139, and it did, and it got me out at the close. But that's fine. It was a successful trade, and I had every intention of hanging on to 25%. It just the market didn't want to give it to me, and that's fine. It's a successful trade. Now, this was unusual. Okay, another trade that I've been in, I think I've called this on in the eye for the last. I really love the way Netflix is setting up. The only thing about it is it could not go after that bounce we've had in the market. So it's just kind of just going sideways. But yeah, this is one that I've been in for a bit, and I'm not going to get into detail on it, but I did take some off today because it failed. It took out yesterday's high and then it failed again. But one to keep an eye on, just maybe set you an alert if it can break above this range. I think this one can get going at some point. All right, 5-day range. That's the last thing we're going to talk about. So in other words, we know all these are above their key moving averages. So let's try to find the ones that maybe are, pulling back on that 5-day time frame. This one's kind of wacky because of that wick, so that's making it CDMO. We just kind of looked at that one. If that wasn't a biotech and it wasn't acting so stupid, I would kind of like that. RLMD, if you look at my swing trade watcher, which you guys have access to, you're going to see that was on my list today. Okay, once again, it had pulled back for 5 days and just above these key moving averages, and on the close today, it had a nice little pop. So maybe one to watch for a continuation, but that's the kind of stuff I'm looking for. I don't want to be buying this wick up here. I want to catch these ones that are just above their moving averages, and so I can participate in this because I know I'm going to bang out, half my position real quick. Shannon does. This is the way Brian Shannon trades. Exactly the same way. He will enter. It's all about the entry. Okay. I look for a setup. I look for an entry, and I would typically take larger size than what I would normally for a swing trade, because I know when I get my move, I'm going to be banging at least 25% of it out, and in this bear market, more than likely 50%. So what that does is that it really lowers your entry price, because once you bang out 50%, it's almost like your second half is more of an entry, a dollar below. So it's a great way to trade in a bear market, guys. If you're used to being a swing trader, look for those setups, and then when you get the move, bang out 50% real quick. Then you're going to find yourself relaxing and possibly letting that work for you. Yeah, let's see. Make sure not Mike C's chatting a lot in there. Lot of wisdom from old Mike C. So that one is one. So this is kind of the stuff I'm looking for. And a lot of times what I'll do, guys, is just put price alerts for if there's a pullback. If they get rammed down and these averages are coming up, I do that a lot as well. DV, here's another example, not far away from its moving averages. Okay, so maybe that's the kind of stuff I want to see. All right, enough of that. Let me share this with you guys. Let me put it back on. I'll start it out from change from the close. And this could be, like I said, this could be a great little scanner for you to do your nightly homework, and also be a great scanner to have up, because all these stocks are strong because they're all above their key moving average. And I'll drop it into the chat window. Let's see, above. There you go, guys. All right, I forgot to pull that. Bear with me while I pull this up over here. All right, so this is the webinar that we had yesterday, and I know a lot of you guys were in there because I saw a few names, but a lot of people probably missed it. And basically, I'm not going to go through all the same frames again. He talked about short selling because a lot of people at Centerpoint do a lot of short selling. They have the best short book in the industry, and what that means is they're able to go out and get locates for you really fast in a matter of seconds. You use the software, you're just looking for a stock that's hard to borrow. You click basically how much you want, and within seconds you will either, in most cases, you will get it. Once you agree that you want it at the price. But anyway, yeah, I traded there. Pretty much anything you want, they can get. They have the best in the industry. But what I wanted to bring to your attention, in case you're not aware of it, is we have a new partnership with them where you can get trade ideas for free. Okay, and the way this works, if you're currently a TI subscriber, okay, all you basically have to do is go to this site right here, okay, and sign up, apply. You got to register first, and then you fill out an application, and you can open an account at Centerpoint, and they will reimburse you for 12 months, the price of trade ideas. And not only that, we're working after this 12 months. Probably what they'll do is we'll put you on their end where you can continue your free trade ideas. So it's going to be an ongoing thing. Since this is kind of a start of things, we made it 12 months right now. If you are with Centerpoint, okay, you really, once again, if you're with Trade Ideas, you don't do anything as far as your account remains the same at Trade Ideas. Okay, you do not cancel your account and go sign up for Centerpoint. You just let them know you have an account, and what they'll do at the end of each month, they'll reimburse you the price of the 118. They won't pay for. You will have to pay the difference if you want premium, which is only what, $110. But if you're a Centerpoint subscriber, I'll just do this real quick because most people in here are Trade Ideas subscribers. Just go to this URL right here. And once again, it's a very easy process. You just basically letting them know on the website that you want to try Trade Ideas for free for 3 months. A lot of people get confused when they see 3 free months because they think, well, great, I'm just going to get it, and then I start paying for it. No. And after that, they will pay for your subscription after that for 12 months. So a great partnership, guys. If you want to look into it, I traded with Centerpoint for 5 years. Okay, and incredible service. I mean, it's not like these big brokers where you have you can't get a hold of anybody. And you have a problem at Centerpoint, and I've done this several times. Boom, you get on the phone number and call them. Someone's going to answer and help you out. And that's a real comforting feeling. If you're an active trader, you like to trade size, or it doesn't matter, whatever you're in. If you want to get out of something, just pick up the phone. You're going to get a hold of somebody. Their routes are second to none. They also have some routes, and even when I was there, Jamie, they had this market maker route that I was able to use for a while for free, and it was kind of nice because I trade a lot of big caps, and it was nice just to go over there, when I didn't need to be real fast or get something, using a fancy route. I could just go over there and crank out X amount of shares, on this market maker route for it was small, it was close to free. It was a small price, but
Yeah, they also have access to dark pools as well, correct?
That's right.
Yeah.
They have access to dark pools, so you can get actually better feels than you're going to get by going through a broker. That's for sure. And it's direct access. There's a big difference between direct access and going through an online broker, because you're actually sending the order to the broker first, and then they route it. So big difference. And that's why we made this slide that says why free isn't free. Okay, there's payment for order flow. They internalize your orders a lot of times, especially if you're doing market orders, and it's not direct access. So trust me, a lot of very experienced traders would much prefer, to trade on something like Centerpoint, because they know they're going to get better fields, they're going to be faster fields, they're going to not go through the shenanigans that you're seeing on the screen right now. So it's you pay a little bit more, but it's comforting to know that you're getting this type of service. All right, Jamie, did I miss anything out there?
As far as the questions panel goes, I do not think so.
Mm-hmm. Let me see.
People were requesting the window, but that's been
Okay.
delivered. So
Okay. Yeah, I think it's if you want to just keep things safe and not too dangerous in the market, chasing some of this volatility around. I mean, it can be great if you know what you're doing, but if not, and you want to slow things down and you want to look at some of these, and don't get me wrong, just because they're in that scanner doesn't mean they're slow. They just let you know that they're strong. And that is relative strength. Anytime you look at the market and it's where it is now, and you see all these stocks still above their key moving averages. Oh, and I don't think I ever mentioned that, but yeah, what I would do as a stop, I think I did, is what happened to it? Did I close it out? No, there it is.
and Andy, you are getting a request for some other windows, I think. I'm not sure which
Okay.
ones.
Okay, Rajiv, do this for me. Okay, I'm gonna put the email in there, and yeah, because I just don't have time to put all these in this window right now. So just send an email of which ones you want, and I will definitely get those to you. Just send it to right there, and just put you can put attention Andy on it, and I'll be sure to get those for you. But yes, when it comes, guys, looking at these stocks that are close to their moving average, let's just try to find one. Nah, it's not a good one. Which one was a good one? Potential. But what I like to do, if I'm entering these trades and they are above all their key moving averages, I want them to stay above all their key moving averages, because if they start breaking down, okay, they're losing their strength. Okay, I know if they break one moving average, okay, it's I know that I'm underwater, even if it's only a little bit. So I don't second guess myself in something like this. Okay, so what I will do in this market is put them really close. In other words, if it breaks through a key moving average, I want out. I want out. I'm not saying everybody has to keep it that tight. You may look in here and say, well, the 20 seems like it's better support. I'm going to trade less size and give myself to the 20. That's okay too. But what I'm saying is, in this market, you want to keep your stops kind of tight, because they can get out of hand really quick. So you're buying them with this incredible strength by being above all their key moving averages. You want them to maintain that strength as long as you're in them. So uh, that's the way I trade them, and I would highly recommend, especially in this market, keeping your stops tight. If it doesn't do what you think it should do, and I'm thinking I want it to stay above these key moving averages, then I'm gone. Okay, my theory has been debunked, so I'm getting out. But all right, Jamie. Let's see. I'm just gonna run right quick, scroll
Yeah,
through,
Raj
see
had
some.
one
Okay.
question about your asking if above all SMAs is your go-to scanner.
Uh, it's one of them. Okay, I have. It's part of my homework, and I will share this one with you as well. As a matter of fact, you're gonna find probably see a lot of these that are on my screen in this one. This is a whole docked window that has several things in it. So this is my homework. I put, if you go to the dock channel bar and you go to the TI Trader Eye, you're going to find it's going to be a docked window, and it's going to have this swing trade watcher in it today. Let's see, did I share that? Let me pull it up too. Okay, this swing trade watcher is going to, and there's been some really good ones in there. You can see Pins was in there today. Hood, I'm liking Hood. Look at this Hood. I mean, I'd rather, like I said, I don't want to chase it up here, but this is one that's just now trying to get above its 200. So tomorrow, it's very likely that this is going to enter into that above all major averages scan. So Hood is actually, even though it looks like death rolled over on the daily, it's, if you look at it, this is exhibiting strength in the short term over the last 6 months. Compared to the market, it's showing relative strength. So, keep an eye on that. But once again, I'm not going to be the guy that, gets wicked out up here. I'd rather wait for a pullback, maybe to these, back down to the 20. As a matter of fact, I'll stick an alert right now in there if it pulls back. So Raj, I just shared, this is my kind of go-to scan. This one called Nice Setup is a good one. You're going to see some nice setups. There you go. This is one that's setting up nicely. Okay, if it pops above this last moving average, and you can look at the filters to see how I created that. But that's the kind of stuff I'm looking for. Is this triggers? I'd be interested in buying that and using that 20 period moving average as my stop. Once again, a cheap look. If it doesn't work, I'm out for very little pain. iTub was on, this is one I'd like to see pull back closer to those moving averages. But I can, UUP's on there. That's funny. I don't have a ETF hack on this one. But anyway, yeah, you're going to see now these right here. These are ones that are more kind of, I don't want to say bottom fishing, but they're potentially, these can be dangerous because over the long term, they're in a very bad downtrend. Okay, I can just pull up Weber and show you. Okay, it's in a downtrend. So I haven't been playing these because I noticed a lot of times when the market does turn, these people are rushing out and shorts are coming in. Blue's trying to dig up from the grave there. But yeah, I haven't been trading a lot of these lately just because I know once the market turns, these things will roll over really, really quick. I'd rather play these when the market's really, really strong, right? And then people are starting to look for other value out there. So anyway, I gave you that just so you have a shot at my homework. Pull back above 50. This is kind of empty right now. And this one right here, what you want to do on something like this is just run the history for today, and it'll give you stocks that pull back to their 10 period moving average. But I haven't been looking at that because a lot of these have been dead lately. All right. That's it for me, Jamie. I'm pretty much talked out. Thank you, David. I appreciate it. Thank you, Ken. And you from maybe thanking you for Jamie, but it's okay. All right. Thank you, Daniel. All right. Thanks, everybody. I'm gonna bring you guys. Hang on. If you're not aware, we have a what's the word I'm looking for?
Test drive.
Thank you. Test drive coming up.
That's right. We have a test drive coming up. So first, a few things on the way out. We have a partnership with Interactive Brokerage. We can connect your Interactive Brokerage account directly to Trade Ideas module Brokerage Plus, and you can manage your positions, execute trades, auto trade, all using Interactive Brokerage and Trade Ideas. Just go to tradeideas.com/IBKR to learn about signing up with Interactive Brokerage. We also have a similar partnership with E-Trade. It's zero commission trading for E-Trade clients that connect their E-Trade account to our Brokerage Plus module. And again, you can manage all your trading directly from within Trade Ideas. Lost my marketplace. We got a new ebook. It's My Favorite Strategy Indicators. Go ahead and download that for free. It's trade-ideas.com/strategy. It's written by our director of software development, and there's some cloud links you can use to import his recommendations directly into your layout. The strength alerts, if you're not quite ready to become a full Trade Ideas subscriber, but you like ideas like the trade of the week, this is a 5 new trade ideas every Sunday night delivered to your email inbox. It's only $17 a month. It's a great entry into the Trade Ideas world. Just go to trade-ideas.com/strength to learn how to sign up. And as advertised earlier in the webinar, we have a test drive coming up. It starts on Monday, October 17th, and it runs for 2 full weeks. You get to try out all of Trade Ideas premium features without an obligation to continue a subscription. It will not start a subscription for you. It just gives you access to the real-time data and all of our support for 2 full weeks. And if you're a standard subscriber, you can also grab that deal and try out premium and see if you do want to do a permanent upgrade or just check out all our cool new features and our AI and all that good stuff. And if you just want to save a little bit today on an upgrade or a new plan, just go to trade-ideas.com/price and use the code FASTDATA to save 15% off any new subscription or upgrade. And if you have any questions, just shoot us an email to info@trade-ideas. It goes to our help desk and gets you the support you need. It's the best way to get support from Trade Ideas. You can also find Steve on Twitter. He's TI-SteveG. You can find Jamie at QuantBot. We have at Trade Ideas. And our YouTube channel is Trade Ideas on YouTube, and we're Trade Ideas Pro on Facebook. So the recording of the session will be up later on tonight or tomorrow. So stay tuned for an email update from GoToWebinar with a link to the playlist where that replay resides. Thanks, Andy and Jamie. Y'all have a good rest of your day.
Thanks, everybody. I'll see some of you tomorrow.
See you tomorrow. Bye-bye.